One of the best way to make entries, let me explain it, man. I have the MACD on my screen, but I'll come back to it, right? Now, a simple way I've taught you guys before a few times was with this, because trading is not complicated. Like, people try to make it complicated, so you come back next month and buy another subscription for the course, man. But it's not complicated, man. It's not complicated once you learn it in an easy fashion. And the way to learn it in an easy fashion is setting up your screen so you can see what's going on. You want to see exactly what price is doing. If you don't understand it, you will understand it because you're navigating yourself to your TP the correct way. You feel me? And that's very hard to do. A lot of times we get out, we pull out, we pull our stop loss lower, and it's like we do everything opposite of what we're supposed to do. You know what I'm saying? So I'm gonna break it down to y'all real quick. First thing you're gonna do is come right here to indicators. You're gonna press this 3 times. Now we want to set these to the same color first. So to change your settings, you go right here to your settings. EMA 9, but make sure they're all the same color, royal blue. That's what we're gonna do. And there's a reason why I'm telling you press it 3 times. You want this to show through your candles. You don't want your candles to be blocking the EMA line. Okay, that's already like a royal blue already. Just this color. All right, cool. You know what I'm saying? Now we're gonna go back and add one more EMA. That's all we're gonna do. Add one more EMA. So EMA. All right, we're gonna add one more. And we're gonna make this a 21. The 21 is gonna represent the price of the US dollar. That's what the 21 is gonna represent. The price of the US dollar. The EMA 9 is gonna represent the price of gold because we're trading gold right now. Now, I'm not really too sure about how it works with other instruments. I haven't really tried it with other instruments because I mainly trade gold. But you know, it should work. We can figure something out. You got an instrument you want me to show you how to trade, or give you a good indicator for it, or a good system for that instrument you want to trade, just leave it in the comments below and I got you. There's no issue. It's just content for me. I'm not sure. So now we have the EMA now. So now let's go to the EMA 9 settings. You see how I go to the settings. You click these 3 buttons right here. Go to the inputs. I'm gonna type in 21. All right. 21. No matter of fact, let me show you the definition of EMA. I already got it for you guys right here. You can break down definition. An EMA, an exponential moving average, is a technical indicator that calculates the average price of an asset over a specific period, placing significantly more weight and importance on the most recent data points, unlike the simple moving average, which weighs all data equally. The EMA reacts faster to recent price changes, making it ideal for identifying short term and momentum. All right. So basically, what that's telling you is that the EMA 21 is counting the last 21 candles, all right, which gives you a representation of where the US dollar is at when you're trading gold. And the EMA 9 gives you a representation of current price of the last 9 candles, all right? So it's not complicated at all. We just make it complicated because we don't like learning. But y'all gonna learn today, whether you want to or not. Now listen, right? So this is what we're gonna do. I'm gonna show you how you can make great entry points, right? This is a great entry point. The EMAs, when the EMA 9, which represents the price of gold, and the EMA 21, which represents the US dollar, come together, you usually see big displacement candles, man. Big moves are happening. Now, when you see a sideways chop like this right here, you get the consolidation. But look what happens every time the EMA 9 is on top of 21. You're going to get some bullish momentum. Now, look right here. A great entry point would be right here. Every time they cross or touch, you're going to get momentum in a certain direction. You're going to get a great trend in a certain direction. All right? That's usually what happens. It's not. Hey, don't ask me why. It's just what happens. I don't know why. It's what happens. But I'm telling you how to figure out what you can do when the trend happens. Now look what happens right here. Let's go down here. Let's go down here. Let me show you something real quick, man. Because trading is fun, and it could be simple. It could be easy if you make it easy mentally, man. And you got to take less pressure off yourself. Like, instead of trying to wonder, what do I do right now? What do I do right now? Let me show you how the EMAs would have helped you. We get a sideways consolidation. Then if you notice something about this EMA 9, the blue one, we get a curve right here. So this is falling, and we get a curve right here. We also get a curve right here, but me, from experience of using these EMAs for a long time, I know that this means we're going to get a bullish vibe. So I would have entered right here. So when you see these two EMAs touch right here, we know that's a great entry. Look at this entry right here. Look what happened, man. Look at that, man. Look at that great entry right there. Look at that great entry. Great entry. So how we know it's about to fall? Like how we know it's about to fall, man? Like I understand what you're saying, monster, but how we know it's gonna fall? It's gonna fall like this when you see it cross under, then it crosses back up. So this is basically the mindset of a scalper I'm trying to bring you to, because I like scalping. So a great entry again right now would have been right here when we see it going up. You may get tricked sometimes with the sideways movement, but it's great for you to see it going up. You want to see it going up first, but then when it does this spread, when you see them lines spreading from each other and separating, that's where you're getting the most push. Now look right here. We have another great entry. These lines crossed and touched again. All right. So we're seeing a lot of candles moving in a different direction. This was an uptrend at first. Now look what happened. It went into a downtrend. Now look, boom. Every time these lines cross, like right here, right here, right here, right here, right here, we are getting good momentum. All right, so now based off these two right here, right now, I can say it's going down, but you never know with the market. So what we're gonna do is add something else. We're gonna add one of my favorite indicators. And I promised I was gonna tell nobody about this indicator, but I was like, man, why not? Just gonna give it to them, man. Like I'm over here, man. I only got to a different level with this shit, man. Now let me see something real quick, right? So we have the stochastic RSI and the stochastic by itself. The stochastic tells you what's happening right now in the moment, and the stock RSI tells you where price should be going in the future. Let me see if I can find a tradable asset right now. Even though it's the weekend, I could probably find some crypto and just show you guys like how this follows price. Right now, this is something that's currently open. As we can see, this is working even on this chart. It's crazy. It's crazy. Now look right here. We have a nice up push right here. That's a nice vibe. But look on the chart though. That's right here. So look how this stoch. Look how when we align this stoch, right? When we look at this stoch. Hold on, let me pull the stoch up real quick, man. We look at this stoch. You see how the stoch follows price exactly where price is going? Look what's happening. You got to look at these indications and find patterns, man. Like once you learn to find a pattern, you find your edge. Look at this. Look at this vibe we got. We got a nice little downtrend right there. But if you notice something, this Stoch RSI moves differently from this one. This shows you more of what price is doing. This shows you what price should be doing over time. Now let's just say you want to say, okay, how would I have known to get in on this trade right here? I missed this trade. How you have known to get in on this trade early? Like if you really want to know how to get in on these trades early, you have to apply certain indications unless you have your market structure mapped out. And I can teach you guys based off price action and marking up my chart. I'm trying to show you without marking up the chart, just using what's available to you. Look at this stoch. Now look right here. We have something you should really pay attention to as a trader, especially if you're going to use these indicators. Look what happened right here. So we had a little mix up. We had price drop down, come right here. We trace a little bit. Then we had a major boost. So how would you have caught in this boost right here? How would I have known to catch this boost right here? I'll show you how right now. So this boost right here, once you see this blue line cut cross exactly at this point right here. Now let's follow this point. Look at this point where this crossed over. These two lines crossed over on the Stoch RSI. Because remember I told you the Stoch RSI depicts the future of what possibly could happen on what you're trading. All right, based off of what it's reading, the data is pulling. So look right here, this exact moment right here, this moment right here. Let's follow the same line up. I don't want to cheat y'all. Just follow the same line up. Look what we see right here. Big candle, right? The stocks crossed over and told you that. That's a great entry point. Great entry point. Great entry point. Great. Look at this entry point over here when it crossed over again. Nice little scalp. When you could have got out, you could have got out right here, caught in the little middle. But a nice place to enter right here would have been right here too. Look at this top of the. Like, see, I like this. How I look at it. This how I look at the stocks. I call this Earth and I call this outer space. When these lines go out of space, they're just breathing. When they come down out of Earth, you see a momentum. Every time these stock lines are in here, you're gonna get some good momentum. Right now, it's breathing. You know what I'm saying? So that's how I like. That's how I like looking at it. I like referencing it in a certain way where I can understand it very easy. I can explain it to a 10-year-old. You know what I'm saying? So it's like, so as you can see off the EMA 9 and 21 are great entries. You can see how the Stoch with great entries be. And I always say this, especially if you're using the Stoch by itself and not stochastic RSI, When it gets out of space, like right here, before it get back down to Earth, man, you want to get it before it get back inside here. You want to make a decision based off market structure. Am I going to buy or sell when it's out here? It's oversold or overbought. Those are great times to get it. You know what I'm saying? Especially after it breaks its pullback, it did a little retracement already. That's when you want to get in. Let me show you guys something different. I'm trying to make it as easy as possible, as simple as possible for y'all, man. Like, it's not complicated, but they're gonna make it complicated, man. Let me see what else we got. We have. Did I break down the MACD already? Let me break down the MACD. Did I break down the MACD? I don't remember if I broke down the MACD. I'm just gonna break down the MACD one more time, just in case I didn't break down the MACD. This is gonna be a bonus for y'all. Trust me. So let me see MACD. I love using the MACD because the MACD tells you momentum. You can verify it with volume. Oh yeah, the volume too. I didn't even add volume. I'm tripping. So let me delete these real quick so I have more space. Let me add volume. Because volume plays a major role too. A major role. All right, let's see. Now the chart looking good. Let me show y'all something real quick. So I just added the MACD down here. What you want to do on Trade Locker, which on what I'm using, come down here, press the L. You press the L, now you can see the screen perfectly. So now you can see the MACD perfectly. So as we can see right here, we're going into a downtrend, right? The MACD is flipped over. The MACD was healthy when it was matching. When it was matching, it was right here. The green is on top of is below the signal. You see how you got how the MACD matches when it's everything's on one side and you get a nice little flow. Get some consolidation, but nice little flow. Get some consolidation right here. But you get a nice little flow of things when it jumps back on top and it's matching. This is when the MACD is matching. See, the green on the MACD stands for buyers. The white, whenever you see a green side, this is a buyer side, seller side. So the white on the seller part will be buyers stepping in. The white on the green part will be sellers stepping in. And sellers are pulling the momentum down. See what's going on? Price is shifting. That's why we have a drop right here. You notice these? Pay attention to these, because these. Hey, yo, 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 y'all chill out. I'm making a video right now, man. Y'all chill out. Y'all in the background messing up my audio, man. I'm about to take y'all out as soon as I'm finished. Relax. You know I don't play about this trading. So listen, right? So now we have a consolidation right here. This is a major consolidation. How you know it's a consolidation? When the MACD is not matching. This is the worst time to enter. When the MACD is under, but the lines are above, this is a consolidation point. Remember this. The MACD has to be matching for you to take that trade, man. Or for you to even stay in that trade. Now look right here. We have a matched MACD. We have the line crossing up. Hold on. Let me pull this up real quick so y'all can see it better. We have the line crossing up right here. Look at this movement we got. As soon as the line crossed up, look at this movement we got. Look at this entry. Great entry. This is how you make a great entry right here. Utilizing these indicators, all right? Now, the MACD is matching right here. So if I was in a sale right here, I would have stayed in my sale. I would have stayed in my sale. The only time I would have got out of my sale when I would have seen the histogram flip and I would have seen these buyers stepping in. Once it's showing buyers, because see, you got to remember this, right? The MACD is only telling you what happened after. But knowing what just happened can help you in the future, right? So now look right here. The MACD is matching. This is the MACD matching. This is the MACD matching. Look at this great uptrend. We got a healthy momentum pusher. Buyers pushing the price back up. That's why this is shorter. Flip. The price is rising on the histogram. It's rising. Then we get the momentum from the two lines. And look what happened. Look what happened. So you don't want to make a great entry right here. Remember this. I'm going to tell you this one more last time. Green stands for buyers. The white stands for sellers stepping in. Red stands for sellers. The white stands for buyers stepping in. So when you see buyers pushing price up and you see this flip, you see these two lines curving upwards. That happened right here, literally. You could have gotten in. That's a great entry. These are how you make great entries using the MACD, the Stochastic, and everything. Now, based off volume, let's just say we're going to go the old school way. Let's just say you want to use the EMAs 21s. Let's say you don't want to use the EMA. I'm just going ahead and give it all to y'all right now. I'll give y'all everything. I'm going to give y'all enough to get y'all through the day. You know what I'm saying? Let me see something real quick. So I recorded this video like 4 times already. I kept pressing the delete button thinking it's the stop button. I got a whole new laptop. And I'm tired of talking about this, man. I just want to listen to some music, roll me some za, sip this Patron, and get in my zone for the market. That's it, man. But I'm gonna go ahead and give it to y'all because I love y'all, man. I really do, man. I care about y'all for real, man. Real talk. Y'all traders, man, I care about y'all, man. I swear. I'll bond y'all out of jail, man. Listen, right? So this is what we're gonna do. We got the red volume right here. Now look, I'm gonna show y'all something with volume. Let's just say you're in a situation where you're in a sell, because a lot of times we get in sells and we get in buys and we don't know when to get out, right? So let's just say you were in a buy right here. Let's say you're in a buy right here and you don't know, should you get out this buy? And let's just say your stop loss is set. Let's just say you set your stop loss. Let me give you like a realistic situation, man. Let's say you set your stop loss like right here. You got in on the buy right. Matter of fact, yeah, let's just say you set your stop loss right here. You got in the buy right because the average trader is getting in on the buy right here. That's what they're going to do. They're getting on the buy right here. They're not waiting for price to reach this level again. They're not waiting for price to reach this level. They're not waiting for price to reach this level again and then buying it right here. Like what the MACD would have told you to also. You know what I'm saying? See how everything goes together? Matter of fact, let me just show y'all that real quick. Let me just show y'all that real quick. Man. Because it's so important. It's like, it's so much of it. It's so much game when it comes to this trading, man. It's so much of it. It's like, I can just talk about this all day. Now, let me show what the MACD told you. Didn't I just tell you, before I pull this MACD up, a lot of traders would have gotten in right here. After they seen this boost, past this, oh my God, I got to get in. And they would have got in right here and hit this consolidation right here. I really won't say a big consolidation, but it's consolidating right here. Because we have sellers stepping in right here. You see all these sellers? And then you have no more green. No more green. You know it's going to drop. So this is one sign alone that's going to drop right here. Even if these crossed over, this is going to drop. Another sign that is going to drop is this right here. We have 4 green candles pumping. One is shorter than this one. The last one is shorter than the first 2. And we're going off of sets of 4 and 5. I like going off of sets of 4 and 5. So after these 4 candles of volume pumping, we got one red cell kind of, and we got a buyer, and then we got a sell right here. We got a major sell. What would have told me at this point right here, I need to get up out of here, is when I would have saw, what would have told me I need to get, hold on, damn, come on, why is the screen acting crazy, man? I'm trying to get y'all this good game right now. I'm trying to get y'all some good game right now, man. All right, what would have told me, a lot of traders would have gotten in right here, right? When they seen this boost. If you disagree with me, get in the comments and tell me what you disagree with what I'm saying. That's all you got to do. A lot of traders would have gotten in right here, entered right here after they seen this boost, and they would have hit this consolidation right here. They won't be thinking like, okay, well, this was just a point where, a lot of buys got rejected at. So, but what would have told me, so I don't have to wait for this to happen and me hitting my stop loss. A lot of traders with the stop loss would have been right here. Let me make this red so you understand what I'm saying. Let me make this red. So I'm about to give y'all some good insight real quick. This would have been the line you entered. TP probably been up here. TP probably been way up here. You know what I'm saying? But your stop loss would have been right here. You would have got in right here. And then you would have got knocked right out. You would have lost your whole trade. You get what I'm saying? Instead of waiting until price reaches this area and breaks this structure first. You get what I'm saying? It breaks this structure. Where it's been rebounded from. It's been rebounded from right here multiple times. It's been deflected and rejected multiple times. You know what I'm saying? So listen, right? What you would do is wait till price comes back, like I just told you, over here, and it breaks this barrier right here, which is this candle, and this is where you could have gotten in at. Could have gotten in right here. And the MACD would have told you to get in right here. You see what I'm saying? See, your mind would have told you get in right here, and consolidation would have hit you. Your greed would have told you, your strategy, I've been trading, I know what I'm doing. I recognize this candle. I seen it on TikTok. Like, that consolidation. That's what's going to happen to you. Consolidation. I seen it on YouTube. I seen it in the course. Consolidation. Are they talking about consolidations? Are they talking about retracements and pullbacks? Okay, now you got the retracement, boom, is price consolidating. Let me see what else we got going on right here. Major consolidation right here. As you can see, the MACD is confirming the consolidation. Anytime I see white on a green or white on a red, I'm considering that consolidation, period. All right. So you will want to wait to get in right here. This area is the area you want in. Once you see price has broken this level, and the level will be, let me create another line for the level. So I don't really like even doing levels too much, man, but I'm gonna do it. I'm gonna just see right here. But I'm gonna put another level. Let's just say, let me just give you another. Let's just put this yellow line, make that a level right there. Let's just see how price has reacted off that in the past real quick. Let me just see something real quick. I want to see something because it has to be some type of indication. Okay, as we can see, and I'm going back, and I didn't do this before I did this video. As you can see that level, look at this level. Look how accurate. Look how accurate this is, man. Look how accurate this is. Look at this level. Prices reached table form rejected. So if you paying attention and doing your little, your back chart. I don't call it back test. I don't do back testing. I call it back charting. Just going back on the chart and just seeing what happened in the past. You'll see, okay, price broke here before and shot down major. Major wick through that. Now, price broke through here, did something, but got a major push down right here. Hella premium liquidity sell zone. Now, it got pushed down right here, got rejected right here. Okay, well, if you see this major push, I want to at least see it break this first. I want to at least see it break up here first and hold above this a little bit before I get in. But you would have got in right here at this line, right here, this gray line where you get in. Your stop loss would have been this red line, and you would have got knocked out. You would jump back in and think it was about to go up, and consolidation would have ate you up. You would have jumped it one more time and got consolidation again. But right here, after you seen this wick outdoing the bottom of all these candles and wicks included, that major push back up, it's a possibility trend gonna change. Anytime you see that, anytime you see a wick like this, longer than the wick above, especially if it's a different color candle, like this, like look at this right here. Let me just show you an example of that. Look right here. We have a longer wick, short wick, bum bum bum. Longer wick, short wick, bum bum bum. You get what I'm saying? Longer wick, short wick, bum bum bum. You get what I'm saying? Like longer wick, short wick, bum bum bum. Longer wick, no wick, bum bum bum. But this happened after. So hold on, that was the wrong thing I just said right there. I'm tripping. I was looking at this. Okay, I'm not tripping. I'm not tripping at all. Look, last bullish candle, longer wick, bum bum bum. Sell candle, green. I wouldn't see. I'm gonna be honest with you. I wouldn't even. I probably wouldn't even enter right here because this right here would have had me kind of. I probably would have waited. I seen the push up, and the flat bottom would have told me it's not trying to go no further. And I probably would have got in after this doji though. After the doji. I gotta wait till the doji happens, man, on that one. But like I was saying to y'all, one more time I'm gonna say it to y'all. I just gotta reiterate it multiple times and keep saying it to you so you understand. The average person would have seen this candle right here. They would have gotten in on this candle, right? Jumped into this consolidation. They would have hit their stop loss, which is this red line, and be like, man, I hate day trading. But they could have just waited, been patient. May have to wait an hour or so because we're on a 5-minute chart. But when it's finally broke, set your alert. When it breaks this price level right here, you start watching it. When it breaks this level, you make a little entry right here. Boom, look at that entry. That is a great entry. But I'm going to show you how you'll know a volume.